Hey everyone, how's it going? So in our last video, I showed you how to find some shorter duration trades, normally 7 days or less. In this video, I'm going to show you how to find stuff a little bit longer duration. We're primarily targeting 30 to 60 days to expiration in this type of trade. So I'll go over the trade setup here. Basically, what we're looking for is we're looking for stock that has dropped after an earnings announcement. And normally after we have an earnings announcement, stocks sometimes can tend to trade sideways. Intel is normally a good one that this happens with quite often. So we can see actually the last 4 earnings announcements with Intel. Intel has actually dropped, and then once it's dropped, it's kind of traded in a range. This earnings announcement back in April of last year, it actually dropped and trended down for about a week and a half or so, but then came back up and stayed in this range here. Then we can see in July it dropped and pretty much stayed flat. It kind of did the same thing again in late October, and it's doing the same thing now. So I feel this presents a pretty safe opportunity to sell a cash secured put in a company that you may not mind owning. So what we're going to do to scan for this, basically we have 3 study filters here. 2 of them are going to be earnings, and 1 of them is a price change study filter. So the price change study filter is we're just looking for a stock that has dropped 8% in the previous 10 bars or 10 trading days. You can change this to anywhere from 5 to 15 days to kind of suit what you're looking for, but I found that normally around 10 to 15 works good. And then we want 2 study filters for earnings. The first one is does not have earnings anytime in the next 50 days. So that's going to basically find the stocks that have just had an earnings announcement. And then it's going to scan for does have earnings in the next 100 days. So having this third study filter here that has earnings, what that's going to do is it's going to make sure that we're finding only stocks that do have earnings. So it's going to eliminate any ETFs. And the reason I do that is because if this pulls up an ETF that's dropped 8% in the last 10 days, normally that ETF is in a downtrend and you're probably not going to want to trade it anyway. There are some circumstances, but for the most part, if the IWM, the QQQ, or say the SPY, if they show up on this list, it's not going to be very often that ever happens. And normally I get a lot of ETFs that you're probably not going to want to trade. That's why I have has earnings to eliminate any ETFs. And we can see running it right now, we're getting about 10 stocks, I believe. So it's 11. I've actually already saved it and I have it pulled up over here. So before we get started, the first thing that I want to do is I want to compare, what type of return is available in an ETF. And the IWM is the one that I like to use to compare this with. IWM is roughly an ETF of the Russell 2000. So there's 2,000 stocks in this ETF. So it's not going to have a bunch of huge moves, daily moves. It can still trend up and down, but we're not going to have a big 10-point drop in one day with this ETF. So what I like to do is I like to pull up the trade tab and I want to go out roughly 30 to 60 days and kind of compare maybe what type of return I can get at the 15 delta. I'm just using the 15 delta just because I feel it's a good number to use to compare. When we're selling premium here in our stocks, we don't have to use the 15, but I just like it to use it as a comparison. So we can see that the IWM at roughly 30 days to expiration at the 15 delta is paying almost 1%. And that works out to roughly 12% annualized. So, we want to make sure that we can get at least this type of return here. Otherwise, it's going to be better just to sell a cash secured put in the IWM than it is to sell anything in any of these stocks here. And then if we want to go out roughly 60 days, we can also compare it. The 15 delta is paying almost 1.47. So, we'll update that. It's roughly, I've got 1.4 wrote down. So I went ahead and just saved that information right here so we don't have to come back and look. Another thing I like to do is I want to target the monthly expirations. And even though we're looking at IWM here, it's got a bunch of weeklies as well. We'll actually just pull up this first stock here. So our monthly expirations are normally going to have better bid-ask spreads than the weekly expirations will. It's not going to be by a whole lot, and it's really going to depend on the stock. If you're trading something like Apple, it's not really going to matter. But some of these lesser name brand stocks, the monthly expirations it can make a pretty big difference as opposed to the weeklies. So if we want to look at just this 18th of April, or March, I'm sorry, 29 days to expiration, the 13 delta is paying roughly 3%. So that's a really, really good return. You know, we could actually go all the way to the 5 delta and collect 1.4%. So that's the 25. So it's actually $15 below the 41 here that this stock is currently trading at. And, you know, that's a pretty big move. It looks like the expected move is roughly $10, so we're well outside of the expected move here. So, you know, that may be a decent trade right there. 1.4%, you know, it's better than 1%, so that's good. If we want to go to the 56 day, the 17 delta is paying almost 6%. So, you know, if we wanted to try and beat this 1.4% in IWM, you know, we can go actually all the way. Let's just pull up all. So, yeah, you know, we could sell pretty much the deepest put there is, the 2250 right here. It's a 6 delta, pays 2.6%. So, you know, it's almost double what the IWM was paying at that 1.4. So, you know, that's something we could look at. Another thing I forgot to mention is when to enter these. There's basically kind of two thoughts that can go here. You can enter the very day that we have the earnings announcement drop, or you can wait 5 to 10 days. I'm not really sure there's a better answer here. If you enter the day the earnings drop happens, normally you'll get a little bit more implied volatility as opposed to waiting. But that's not always the case. It really is going to depend on the stock. But I don't really think there's no right or wrong answer there. It's really going to be what you're comfortable with. Me personally, I like to wait about 5 to 10 days just to kind of see what is happening, because sometimes it could continue to trend down. Another thing you can do is use, you know, maybe like a directional indicator or something, or a momentum indicator here. You know, the RSI I feel is pretty good. You know, you could have waited until this got into oversold territory right here. So that would have been, you pretty much could have sold a put on the bottom if you waited for it to get fully oversold. But that doesn't mean it's going to get oversold either, because, you know, the next earnings announcement here in July, you know, you would have been better to sell that cash secured put the day the earnings announcement happened, or the day of the drop, because that was pretty much our low. You know, we kind of came up and then back down. So, you know, it's just kind of, it's going to be really personal preference there if you want to wait 5 or 10 days, or if you want to do it that day. It's probably going to work out about, in the long term, probably about even. I don't really think it's going to make a big difference what you do. But like I said, it doesn't hurt to wait a couple of days if you want to do that. So if we want to look at a couple more of these stocks here, so, you know, we can see that AKAM here, it's only on its second day after earnings. You know, it could keep going down. At the 15 delta, we're paying, you know, roughly 1%. So I'm not really quite sure I would try to trade this. I would probably, instead of going with this, I would probably rather just sell a cash secured put in the IWM, because, you know, this is just one stock that's paying roughly the same as our IWM trade. So, you know, this is going to be one of those instances where I would probably avoid this one right here. I would like to get a better return at this delta than what this stock is offering. So this one here looks okay. You know, the 14 delta, we're at 1.3%, so we are better than IWM. If we want to look at the chart here, you know, we can see it actually dropped and then kind of came up. It's dropped again. So, you know, this may have some support in this area. You know, it's kind of hard to tell. So Fastly, you know, this is the day of the drop, so we're not really sure what's going to go on. The 11 delta is paying roughly 2.5%, and that's a 15 strike. The expected move is $4, and, you know, that's roughly $5. So we're outside the expected move. We're still getting a 2.5% return. So we don't really have a 15 delta to go on. We do see that the 19 delta is paying roughly 1.5. So the 9 delta is paying 0.81. So the 15 is probably going to be, it should give us a little bit better than what the IWM was paying. So this may not be a bad one to go with as well. So this stock is almost too cheap to trade. You could go with the 26 delta here, but I would really like to give myself more room. And it's kind of the same thing with this. See, and this is a problem you're going to run into as well. It shows this 15 delta here is paying 5.5%. But the reason for that is because the return on risk is actually calculated from the midpoint. And we can see that our midpoint is probably going to be around 35 right here, probably, just because there is no bid. So, if there was a bid here of 35, it's going to change what this return is. And so basically nobody's interested in buying these options. So it's kind of going to be a waste of time for us to try to sell them. So PayPal, this is one that actually dropped probably about a week or so ago. And, we can see this one is actually trending down. We can see it's heavily oversold. So, we could actually kind of watch. And, if you're more of a chart type person, you could just watch this every day and wait to see if you get maybe an indication that we're going to come, out of this bearish trend here. And maybe decide to enter. If you were to enter today, the 17 delta is roughly 1.8 or the 11 delta is 1.2. So, we could still sell this 90 put here. The 11 delta, 1.2%. It's going to give us a better return than IWM still. So that's probably not a bad trade as well. And it's going to give us roughly another $18 of a drop. So that 90 is going to put us way down here. So Roblox, this is one that actually dropped yesterday. And it looks like it may trade flat, so we'll have to see what happens with it. The 18 delta is paying 3%. The 9 delta is paying 1.5%. So, we could go with the 40 right here and get 1.5%. That would be a pretty good return. Now we have Under Armour. Under Armour, the 17 delta is 1.5% at the 15. And we can see it's kind of been flat right here. So, the market is down today. So that's part of the reason why a bunch of stocks are kind of red more than normal. Then we have Viacom. Something's going on with Viacom because they're not really doing anything today. So anyway, this was kind of a quick video, on how I choose some of this longer duration stuff. And, I know that we only looked at the 30-day expirations. You could also do the 60-day here as well, because it's going to let you avoid the earnings announcement. So, even though we only looked at the 30s, we could have also looked at the 60-day too and seen what kind of return we could have gotten. I guess we'll look at a firm real quick at the 60-day and see what it was. At the 17 delta, it's almost 7% return. So, if we want to beat this 1.5% return, we could actually go all the way out of the money and sell this 22.50 here, still get 2.7, which is going to be double what the IWM was paying. And it's well outside the expected move as well. And another thing, just because I'm showing this expected move, the expected move is really just 68% of the time. So 68% of the time, we're going to stay in this range. So that should just about do it for this video here. I do have one more video planned for cash secured puts, and it's going to be really high implied volatility trades. I'll try and do that in my next video maybe. But anyway, thanks for watching and have a great day.